What's been the biggest challenge of getting this deal done?
See, I have been discussing with multiple investors or multiple organizations in the last 1.5 years, because we were reaching 20% of capital adequacy. We were looking at the next 5 years or 10 years. And when I was looking at, I thought if I get a big international partner, I can look for 100 years. So when I say 100 years, a good partner like MUFG Bank, who if they are interested in India, then I can definitely think of a much larger story. So that's how I looked at. So 20% is a huge support, and that gives me a long runway.
Well, we wish you the very best of luck as you start this new journey with MUFG Bank as your partner, and look forward to hearing more from you on the opportunities that you see on the road ahead. Mr. Revankar, many thanks for joining us here on CNBC TV18. It's been an absolute pleasure. Well, that is the big news maker and the big deal of the week. From all of us here on The Record, thanks very much for watching. Stay tuned to CNBC TV18. We'll be back in a moment with plenty more.
Go beyond market headlines to understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
the Asian markets have started off this morning, mirroring what Wall Street had done from Friday, and the indices continue to trade with a positive buy.
Hey, Santa cheer. Well, there's not been too much of that on the screen, but we had a little bit of a glimpse of it on Friday.
First it was MUFG and now it is brokerages who are being positive on Shriram Finance.
So here the bell goes, and what we've got is a 90-point lift-off.
So I actually do think you will see some pickup in the capex cycle.
Next financial year, that is 26, and maybe coming in the 27, there will be a deficit of supply.
The international markets, even the last few trading days, do want to trade higher when it comes to gold and silver.
We're building on the momentum, bulls firmly in control.
An international player of relevance. We are negotiating free trade agreements and comprehensive partnerships.
See, capital is always welcome. And when the capital is coming from a reputed international organization.
It's been a good day for the markets, right? Carry on those gains from Friday.
Here with us on Closing Bell, and we're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay, as always with me, Nigel D'Souza, and it's indeed looking like a very, very good screen. We've had a very steady day of gains. The gains are intact. There's momentum across the board, and you really can't complain. Lots of sectors participating, broader market also participating. So, Nigel, is it the Christmas cheer?
It is, right? I mean, what more could you expect, Surabhi? On the 18th of December, in our morning chat, we made this point that when the short positioning goes to 92%, the last time round was in October, and we saw an 800-point bounce. From that date till today, we have close to around 500 points. So we hit a low of 25,700, and today now we're at around 26,200. So volume participation may be lower, but the bulls are saying, who cares? Let's take advantage of it. And the good news would be is actually the breadth of the market.
Yeah.
That continues to be in favor of the bulls. 3:1. I've just got one more trading session to track the markets. But you're going to be the good luck charm.
Hopefully coming, ending the year on a high, and hopefully getting set for an even better 2026. That's the hope. But this is a very good looking screen. Look at the advanced decline ratio there. I mean, and it's been very steady. That's the other part. Today, it's not been a volatile day, choppy day. It's just been rock steady. Let's look at some of the winners on the Nifty. So the Shriram Finance story continues, and how 60% plus up this year. $4 billion in the bag, and lots of brokerage upgrades coming through, 4% higher. We'll talk more about the stock and, of course, keep playing out the exclusive snippets from the interaction that we had with the company as well. Trent is having a good session. I haven't seen Trent become the second Nifty winner in a long, long time. And Trent is finding some takers, 4% up over there. IT is a story that has been strong from the start. Today, most IT stocks were doing well. Infosys, Wipro, they're still holding on to gains. Some of the metal counters like JSW Steel, Hindalco, they're doing good. So the Bank Nifty is not the leader of the market, but at least it's not, sort of too much of a drag on the way down. It's still up about 0.5%, the Nifty Bank there you see. And bigger names like ICICI Bank all contributing. Not too much on the downside, actually. SBI is the only one. SBI and Kotak, two banking stocks, which are keeping the lid on otherwise what looks like a Christmas party starting here on the screens. So let's get going. Let's tell you what's lined up on the show today. Plenty coming up. So the large cap space is looking very, very smart. The Nifty has consistently remained above the 26,100 mark all through the session so far. All sectoral indices in the green. Stars of the day are on your screen. The Nifty Metal Index, the IT Index doing very well, and the broader market also seeing plenty of bounce. Of course, then our spotlight on Shriram Finance continues, and we'll talk about what next from here. The stock has already rallied in a big way. Is there juice left for more? What are brokers saying, and what should you be doing? We will ask the excerpts, ask the experts, and also play out the excerpts of our exclusive conversation with Mr. Revankar. The management of Nalco has been striking an optimistic note on demand, pricing, as well as margins. Shares are up 4.5%. More from that conversation coming up in just a bit. And more newsmakers today. GE Vernova spiking following that major order win on the HVDC side. There's a relief rally unfolding in KEC International, almost 4-5% up there as well. So this is what we'll cover as we go along. So plenty lined up, packed 1 hour.
Well, that's right, Surabhi. But the big question is, how do you position yourself actually in the final hour of trade? That's going to be important. But before we get to that, I just want to highlight a few stocks actually from the broader markets that are seeing a big move. Rajesh Exports, the stock we don't talk about very often, that's actually up now close to 15%. Big up move is what we're seeing on that one. And on the flip side, HFCL has come in for some profit taking. So both these two are seeing a bit of a violent move. But let's get Mitesh back in. Mitesh, what do? You're getting a good bounce from the recent lows. Take money off the table and enjoy Christmas, or you're good for more? Just trail it with a stop loss.
I think, what we have seen repeatedly, Nigel, is that around 26,200, 220, we are seeing some kind of supply. But what has happened is that, in this entire consolidation, the overbought situation of the indicators have slightly cooled off and, there's some space on the upside. So I think now, if you join the highs, which were the earlier highs of, first was around 26,060, which was on the 23rd of October, then about 26,097, which was on the 29th of October, and then 26,240, which was again 20th of November. If you join all these lines, the upward sloping supply line comes in at about 26,380, 400. So I think this time we are looking at making a new high. Now, I think, very clearly, so people who are carrying long positions, my advice is to remain long and try to take profits around 26,350, 400 zone. If we cross that level, then I think we'll be in a breakout kind of a phase. But for the timing, we'll revise the target on the index on the upside.
Okay, got it. Revising the target on the upside. So what is the level we're headed to?
Around 26,380, 400 zones.
380, got it. And the stop loss, just missed that?
On the stop loss side, I would suggest that for the timing, if someone wants to take positions right now, I think it will be a good stop loss will be around 26,056. So maybe if you want to enter a fresh, buy partly now, buy partly on 50 points decline, but slightly deeper kind of a stop loss, 26,050 is my stop loss.
Got it.
Okay, by the way, I'm just pointing out that a lot of PSU stocks are having a phenomenal session. And Mitesh, we want to get stock trades with you as well. And also throw in a word on some of the defense names, especially the shipbuilders, by the way. They're all going through the roof. The names are Mazgaon Dock, 5%, Cochin Shipyard, 7%, Garden Reach Shipbuilders, 5.5%. And with this move, the overall defense index, Nifty Defense, that's become the best performing index of the afternoon. A near 3% gain on the Nifty Defense Index. So something definitely happening out here. Mitesh, just a word on these stocks or anything else that you'd like to trade?
Yeah. See, the defense stock, there's some kind of a reversal happening on most of the charts. And the one, which have caught my attention are basically Garden Reach Shipbuilders. The last swing period was around 2450. So I think, you're close to that because the stock has already rallied by about 5.75%. But I think once we cross that, good chance that we are looking at 2550 and in a good case scenario, even 2640. So the upsides are there. Similarly, I think, Cochin Shipyard also looks like some kind of a reversal trade in the short term, though the first target of 1660 has just been achieved. But I think I am looking at revised targets of 1700 and possibly 1730. So both these stocks look good, especially the shipbuilders in the defense pack. That apart, HAL is something, which has caught my eye as well. A trade can be taken once the stock starts getting past 44, 20, 30 zones, still about 1% away from here. But once that happens, the stock can possibly head towards 45, 50.
Got it. Okay. All right, Mitesh. Thanks a lot for that. Let's focus on a couple of sectors though, that are doing very, very well in today's trading session. And aluminium is one such metal that's done well. I recall earlier in December, we had put out a piece with regard to the way aluminium was moving, with regard to the demand, with regard to the pricing as well as the supply was likely to lag demand. And on the back of that, we said maybe aluminium could do better from here on. And I think from there on, Nalco, Vedanta, as well as Hindalco, they're up more than 10%. That's in this month itself. But we were joined by the management of Nalco, so I just want to run you through some top highlights. First, on the demand-supply scenario, they said that aluminium is expected to remain in deficit. That's according to their estimates. And they're taking into account that in Indonesia, we will see 1 million tons of capacity coming on stream. But they're saying in other parts of the world, whether it's in Mozambique, whether it's in Australia as well, their supply has been halted out there. So because of that, they're saying aluminium will be in deficit. Alumina, though, that will move to surplus because capacities are coming on stream. In Indonesia, 2 million tons are coming on stream. And even some China units are restarting. So that's in terms of demand supply. On pricing, they're expecting aluminium prices to hold around $2,900 to around $3,000 on a per ton basis. Remember, at the end of last quarter, they were talking in the vicinity of around $2,700 per ton. On alumina, they said, yes, alumina has been weak because of additional supply that's hitting out. But they're saying they believe that prices are now bottomed out. They're expecting alumina to be in the range of $320 to around $330 on a per ton basis. They go on to state that none of their aluminium sales are actually hedged as of now. But on alumina, if they can get a rate of around $350 per ton, they probably could hedge some part of their supply. Moving to the cost part of business, well, they're saying the use of captive coal is ramping up well. Earlier, they used to use close to around 7 million tons of coal, but that was bought from outside or via linkages. Now they're getting 4 million tons from their own captive units. So that saves them close to around 100 crores and it's functioning at optimal levels. On the employee cost side of things, they're saying that the employee cost as a percentage of sales, that will decline from around 15-16% currently to around 10 to around 12%. And margins could be in the vicinity of around 42 to around 45% over the next 2 quarters. On capex, they say yes, they're going ahead with some capacity additions, so 1,700 crores per annum for the next 2 years. And the additional 1 million tons of alumina refinery, that will come on stream in the middle of 2026. So that's all the key highlights. And they also went on to state that as of now, there's no plans of divestment in Nalco. They haven't heard anything on those lines. In fact, post that interview that to be had with Mr. Singh, the stock is now making a fresh all-time high. Let's get you a snippet of that chat that we had earlier today.
The present projections are concerned in the next financial year, that is 26, and maybe coming in the 27, there will be a deficit of supply. Some of the smelters, they are on the verge of some shutdowns like Mozal, Iceland, and Australia, Tobago. So there will be a deficit in the supply. Australia capping its production to around 45 million ton. And since the demands are increasing, the demands, if you see EV sector, construction sector, power sector, now data centers, huge data centers are coming. So the demand is increasing, and on the supply part, some restrictions from the smelters, then the deficit will be there. Now, at present, if you see the LME, it's around 2850. And coming forward in the coming days, the next year, if we see 26, it is somewhere around $3,000 that we are seeing, considering the deficit in the market, which is going to be there in the next year. So somewhere around 3,000, around in between $2,900 to $3,000 will be the LME next year. Alumina prices, if you see, it has come down to around $310, $320. It has bottomed up just because of the excess of alumina in the market. Indonesia, if you see Indonesia, there is an increase in the capacity of around maybe 2 million ton to 3 million ton. Next year, again, they are going to add the refineries. India also, refineries are coming. And due to the closing of smelters, the demand of alumina has also gone down. So there is excess of alumina in the market. China also, some of the refineries are coming. That's why the pressure on the prices is there. And at present, the prices, which is somewhere around $320, it will remain in the next financial year also, because excess of alumina in the market.
Well, it's a good time to get in our market expert. We have Deepan Mehta of Alexa Equities who joined us on the show. Hi, Deepan. I've been having a positive influence on you, as you said last time around as well. And some of these metal stocks now, they're shining, they're glittering. What's your take? What do you like from here?
I heard the Nalco management. First of all, Nigel, good afternoon. I heard the Nalco management, I think very interesting. And this company, hopefully, if it consistently raises its volumes, could be a steady performer. What I like best about Nalco is its attractive valuation at just about less than 9 times or so, and good dividend yield as well. Almost 40,000 crores of fresh expansion plans underway, which can be easily financed. So very positive on Nalco and getting more and more positive on a lot of metal companies as well. So I think that one more avenue for investors opens up, considering the way the rupee has depreciated. The clear beneficiaries are all the metal companies where the contracts are traded in dollars, and therefore I'm sure realizations would have gone up for them, and also to an extent import trade would have come down.
Okay, all right. So that is as far as metals are concerned. If there is something that's shining almost as bright as metals, it's probably financials, Deepan. Look at Shriram Finance. The market kept saying, it's the most undervalued stock. It was the cheapest NBFC, so on and so forth. Well, the Japanese, I guess, know when they see a good deal. What's your sense now with the with the current valuations? Is there still any sense in getting in now at these levels, Deepan? A lot of brokers have put out price targets which are above 1100. What would you say?
Good afternoon, Surbi. First, a disclosure that we are invested in Shriram Finance, have been for a long time. And I think that this is a very good development for shareholders of Shriram Finance. It gives a lot of capital to the company to expand not only in its existing line, but also into other products within the financial services and the finance space. And more importantly, I think it's a very economically sensitive company, and with the CV cycle looking up, that will give more opportunities for Shriram Finance to lend as well. Only thing lacking in Shriram Finance is that whenever there is stress within the NBFC sector or within the commercial vehicle financing sector, their NPAs tend to shoot up, I think, much higher than their competitor or at least peer group company like Cholamandalam. Hopefully that may change going forward also, but nonetheless, I think it created a discount to Bajaj Finance and Chola Finance. And with this kind of money and fresh support coming in, certainly I think investors will re-rate the price to earning, price to book multiple for Shriram Finance. So very positive on Shriram Finance. And I don't think the full potential of this deal has been captured in the stock price just now.
Okay, all right. So you also expect more upsides, got that. By the way, going back to Trent, let's put a longer chart on Trent, 1 year chart. It's been quite the story. One of the market's most loved stocks, and then, kind of just fell out of favor, completely out of favor. Yeah, that's what we're talking about. 40% lower. The high for Trent was, somewhere around 8,000 plus. Deepan, I was speaking with someone who runs a PMS the other day, and the person very honestly said that, look, I bought Trent at 4,000 thinking it's halved. So kuch to ab chalega. But it's been such a difficult year in the market that the whole year we've just spent waiting. So how do you look at something like this? Great pedigree, great business, but it's just not growing at 50%. And then it's languished the entire year. Is there any sense in accumulating now at these levels?
So, I think the excessive valuation has got corrected. And certainly there's a disappointment on the growth rates as well. That also have cooled off. And that's to be expected, end of the day, it's a brick and mortar company. And some point of time, the base effect does tend to catch up. And there are only so many more stores that you can keep on opening up. So I think that's the issue here at Trent. I've seen that play out in Titan as well. And my sense is that expensive valuation that it's trading at just now will remain. And investors should expect returns in Trent in line with the earnings per share growth, which could be in the region of 15-17% or so. So if you're comfortable with that kind of a return on the stock, I think you should remain invested. Look at buying also Trent. Again, as a measure of disclosure, we're invested in Trent, so our views could be biased. But that's the kind of return profile that one can expect. And of course, you have the benefit of, the Tata Group company, excellent corporate governance standards, great transparency, and within a sector where there is still adequate growth to scale up the operations.
Okay, got it. All right. Quick word, Deepan, on GE T&D, GE Vernova T&D, as well as Hitachi and Siemens. From that pack, what do you like? I mean, with this Vernova winning this big order, the stock is obviously excited, but they are putting themselves in the reckoning for HVDC orders.
I think all great companies, and as an investor, you should remain invested, but they're very expensive. And there could be some degree of volatility in the earnings as well. I think the better way to play this electric distribution is to buy the transmission companies. Very positive on KEC, Kalpataru, and Transtrail. All three of them, I think, very good prospects over there. They are also expanding overseas. So I would play the electrical distribution equipment industry through the transmission companies where I think there's some margin of safety and reasonable valuations. And their order book position also is shaping up pretty well, at least 2-3 year visibility is there.
Okay, all right, Deepan, thank you very much. We will leave it on that note for today. Appreciate you being with us and giving us all those ideas on stocks. You have a good afternoon. Well, with that, we slip into a break, but when we come back, Dinshaw Irani of Helios Mutual Fund will join in with some market perspective.
Welcome back. Keep an eye out on IdeaForge. I don't know what's gone on there. That's a rank underperformer. It's up 16%. But, in the last in the last half an hour, I think, 4% uptick is what we're seeing. Resist is up close to around 12%. Now it's up 16%. But my man, Hormuz, he's got a nice, neat list of all the top movers and shakers. Hormuz, take it away.
IdeaForge is part of that list, but I'll start off with NIIT first up. And a lot of mid-cap IT stocks are moving higher today. They're 13% higher for NIIT, the biggest single-day gain since November of last year. Volumes today are the highest since April of this year. And look at the volumes as well. We've had 1.75 crore shares that have been traded today. The 20-day average is less than 2 lakh shares. And the stock now is at a 50 DMA of 98. The 100 DMA is at 106. But the stock has been a rank underperformer as well. The stock has halved from its 52-week high of 204. And it is set for its worst calendar year return since 2008 is NIIT. IdeaForge, as you just mentioned, the biggest single-day gain since May of this year, now 17% higher as we speak. The market cap is back above 2,000 crore. The volumes are the highest in over a month. I'm pretty sure that is bound to change as the stock continues to move higher. You look at the volumes here, 64 lakh shares have been traded on IdeaForge. The 20-day average is less than a lakh, 95,000 shares. The stock now at its 100-day moving average and 200-day moving average, which has convincingly moved above both of them, which was at 474. The stock still down 65% from its post-listing high, which was 1344, which is exactly double of its IPO price of 672. So it's down 30% from its IPO price as well. The railway stocks, they are getting a bit of a green signal today. And look at all of them. Jupiter Wagons is now up almost 20%. RVNL, IRFC2 among the gainers in the F&O space today. It's been a while since we said this, but look at the volumes here. Jupiter Wagons, 7 crore shares already traded today. The 20-day average is 7 lakh shares. RVNL as well, more than a crore shares traded. As for IRFC, and both of them anywhere between 4x to 5x higher than their 20-day average respectively. And lastly, Sasken Technologies is also seeing its biggest single-day gain since January, another double-digit mover today. It's gained only in 5 out of the last 25 trading sessions before today. There's a kind of underperformance that the stock has had. The volumes are the highest since November of last year. Almost 3.5 lakh shares have been traded today. The 20-day average is only 13,000 shares. This shows the kind of volumes here as well. The stock moved above its 50-day moving average of 1340 intraday, could not sustain above it, so it's still below those levels. And despite this move today, December is turning out to be the 5th straight month of negative returns, and as a result the stock is down almost 40% so far on a year-to-date basis, turning out to be the worst calendar year for the stock since 2011.
Okay, all right, got that. Thank you very much, Hormuz, for all the movers and shakers and the buzzers. Interesting list as always. Now, as promised, let's bring in Dinshaw Irani, CEO of Helios Capital, into the conversation. Dinshaw, thank you so much for joining in. So glad to see you. We thought you'll already be on some, fancy island somewhere, some exotic destination or a jungle. So I think we've caught you just in time before the holiday, is it?
Yeah, Surbi, actually, thank you for having me on our show, and a very good afternoon to you, your team, and the viewers. Actually, I don't go on vacations in December. That's the best time to be in office and still be on vacation. Everybody's out of office.
Yeah, good one. And it makes economic sense as well. Everything outside is too costly, too chaotic, too painful. So yeah, maybe stay at home. I feel better. Thank you so much, Dinshaw. But, in that lighter vein, now what about the markets in 2026? Is it going to be calm seas? Is it going to be a wild jungle? Or is it going to be a mountain peak? Just keep racing up to the top.
Okay, so basically, just before me, you had Hormuz, who was another Pasi. So I was going to tell you that probably the markets correcting are like having 2 Pasis on the same show within like a couple of minutes. That's very probability. So anyway, so our feel is that...
you guys will be the good luck charm, I think,
Where's the dansa kya?
Yeah, good luck charm.
But anyway, so as I was saying that the worst seems to be over in the market. The fiscal tightening, monetary tightening that India went through the previous year impacted this year's performance. And obviously with the RBI going on a rampage in terms of easing out on the monetary front and government coming up with the fiscal salvos as such, I think that has helped the market to recover quite a bit, in the sense the performance of the companies within to recover quite a bit. September was just a beginning of the positive returns that one saw in the market, as in the earnings. And I think that'll continue into this year itself. I think the big icing on the cake will be as and when, whichever that elusive final signing of the deal with the US. I think that'll be the much needed icing that is gonna drive the FIs back into the country, because I think they're waiting on the sidelines for that clarity to happen before that. Though they have started coming in a trickle, I think the big one will be once this goes through. I mean, this is through such.
All right. Hi, Dinshaw. Good to see you in Dinshaw. Missed a drink with you this Christmas, but hopefully in 2026. That said, Dinshaw, let's talk about a few stocks. You know, y'all like the EV theme. I recall we chatted about this in the past. Ola as well as Ather, both of them, y'all were quite bullish on it. Ola, I think y'all did some mild lightning at 60, 70 rupees after it had that brisk move. Now, the promoter, Bhavish Agarwal, we know he's created a good entity. You could crib about, the after-sale services, but otherwise, it's a great entity. I mean, they had 40, 50% of the market at one point of time. What's your view? Promoters come in there. On 3 consecutive days, he sold, but they've given that a surety that now we are done and we are going to be focused on business. The promoter, leverage at the promoter level, that's been cleared out. Your view on it, would you look to double up? Would you continue to hold that positive bias on the stock?
So basically, Nigel, the fact was that ultimately it's a two-wheel play, right? I mean, he has to, the two-wheelers are the bread and butter. The EV two-wheelers are the bread and butter of that particular business. Though we've always been calling it out as a tech company, they've done wonders on the technology front in terms of non-EV offerings in the market, which is battery storage and stuff like that. But ultimately, the bread and butter is two-wheelers, and that is where he has to perform. I think we're basically, as I told you earlier, also we're on a wait-and-watch mode here. We did add a bit when the last lot was being offered as such, but that was because we knew that there'll be the amount of pressure that was created has to be released once that last block is over and done with. The promoter selling I'm talking about right now. And they were quite vocal about it, and which was a positive thing, by the way, that to let go of their pledges by selling off the stake and still having a healthy stake in the company per se. So I think beyond that, I don't think we're very keen on picking up the stock right now, because we're waiting, as I said, that for some kind of positive triggers on the two-wheeler registration bit, two-wheeler sales bit, market share gains bit. They've been losing market shares all along. So I think that will be the last and final thing that we're looking at to make us feel comfortable that, look, the company is back in a big way again in the business that they're supposed to be in.
Okay, got it. All right. So you're continuing to maintain your positive bias, but you're prepared to wait in there for a long two-wheeler ride. You're okay with that. What do you make of these recent deals? MUFG coming in there signing a multi-billion-dollar check for Shriram. And if I remember one of the conversations we had, the largest exposure you'll have is to the NBFC space. You could correct me on that. What do you make of that? And if you could hint us, what do you like from there? Is it housing finance, gold finance? Is it, auto finance? What is it? If you could help us out.
So, Nigel, actually, we own Shriram Finance. So that's one caveat that I want to get out of the way.
Well done.
Thank you. But anyway, the fact is that we've been bullish on NBFCs. Once the rate cycle started off, I mean, the reversal started off when the rate cuts started happening as such. I think we realized that the banks will have a bit of a compression on NIM. So we slightly shed the weight on banks and moved into NBFCs. And that's where we started picking up these names. And in fact, as you mentioned, we got most of those guys. We got auto financiers, we got housing finance companies, we got consumer finance companies. Bajaj Finance is one of our big holdings. So that way, so we've been quite proactive in managing that flow. But anyway, the deal part is probably a pop that much needed pop that was needed, showing the world that look, India is a very lucrative place to do businesses like an NBFC and stuff like that. But anyway, that's not the only exposure. We also have exposure within the financial services in market-linked entities, wealth managers, mutual funds, asset management companies, rather, and stuff like that. So we're quite gung-ho on the whole overall BFSI space anyways.
So BFSI gets a thumbs up. What else? One more money idea for 2026. Investment idea. Give us one more, some undervalued, potential, very high growth theme in the market, if it exists.
My small cap fund.
Okay, that of course. But okay, let me ask you, what would be the? I don't have the fact sheet in front of me. What would be the highest sector contribution in that small cap fund then, or the mid cap fund?
Subi, you won't have the fact sheet in front of you because the fact sheet was the one which was in November. And after that, there are a lot of water has flown under the bridge. So there's quite a few changes which has happened in the portfolio. But if you see that particular portfolio, I think the biggest, obviously, is BFSI is once again one of the big positions there. But even consumers is a fairly big chunk of the position. Industrials, auto ancillaries, these are a few. And they're very vibrant companies. I mean, if you see the whole small cap universe, which is not just 250 stocks, but if you go beyond that, in fact, we've gone down as low as 3,000 crores. And so I think the universe is pretty exciting. And that's what we liked about that space. And that's why we brought out that fund.
Hopefully. Of course, I know you won't, but I'm now quickly going to wait for the next fact sheet to see what are the changes and what's in and what's out consumer. Speaking of consumer, I mean, I think I'm just going to leave you with, of course, best wishes for Christmas and best wishes for the new year. And with Nigel's request, we are very happy to come over for some lovely Parsi food, for some patrani machi.
Patrani machi.
We are absolutely, in love with the Parsi community. So whenever you invite, we shall be there.
We can carry our own bottle also.
Oh, okay. I didn't say that. Nigel said that. Okay. All right.
Again, season's greetings to you and all your...
Thank you.
Cheers.
Thank you so much. And thank you for all the fabulous conversations. Look forward to more in the new year. Okay, well, that's the view from Helios Mutual Fund. But Nigel, while he's planning his next party before Christmas, he's also looking at the F&O stats for now. What's happening, Nigel?
Just need to get through today and tomorrow, Surbi. Then I'll track you on, in terms of the market coverage. For now, let's look at the F&O action, which is looking quite good, actually. The Nifty hovering around that 20 DMA. In fact, we have breached that, which is good news. And the Nifty Bank is around that 20 DMA odd mark. When you conquer that 20 DMA mark, it's obviously a good sign. And that screen is telling you that this market wants to go to higher levels. The PCR, that though, which was at around 0.7, 0.72 odd, that's moved to around 1.35 or thereabouts because the put writing has come back into play and some of those call writers, they are packing their bag. They want to move out of the market. So you just pull up a couple of strikes. The 26,100 put, the premium out there was 150 rupees. The last I checked, it was close to 30 rupees. Pull up another one, 26,150 put. Out there as well, the premium was close to 200 rupees. That's come down to 50 rupees. So those writers, they're feeling very, very good. And just check this out. After a while, some of these call buyers actually are making money. So we should pull up the strike, 26,150 call. At the start of today, that premium was close to around 18 rupees. That has moved to around 54 rupees. So big uptick is what we're seeing out there. So for the time being, it appears that the bulls want to take this market a little bit higher as we speak. Stocks in focus. A couple of those counters, actually, PSUs have come in for a short covering bounce. Marscon Dock, that's stock is up. You see the open interest lower out there. Not just that, you pull up even Bharat Dynamics out there as well, stock up. You see, that the open interest is low out there. And there are signs of fresh buying. If you look at solar industries, good uptick is what we're seeing on that particular counter. Fresh buying is what we're seeing on that name. And, if you pull up Infosys as well, that seems to be finding its way up. No, this is not Friday evening when we didn't know what was going on with regard to the ADR. Infosys has been holding one end up. So you have Reliance in good form, the banks in good form, and tech finding its form. Good times, at least towards the end of the year. But Surbi, I'll toss it back to you.
Yes, absolutely. For the time being, I mean, it's a very, very good looking screen and the bulls will definitely like the sight of that. Well, speaking of the bulls, let's see what the feeling and the mood is like out there. Nimesh is joining in. D Street Chatter. Nimesh, it's not been the easiest of years, but I think this end and this way the last week has started, this everybody will like. What's the sense?
Surbi, apart from the Nifty and the Bank Nifty, I guess what today stands out is the broader market participation. That seems to be coming back after many weeks of underperformance. Some bit of traction seems to be there in the cash market stocks. One of the reasons could be that for the next 10 days, you might not see a very large FI participation and hence a bit of buying interest back from domestic funds into select mid-cap and the small-cap names. So that explains the kind of move in the broader markets today. The Nifty has been actually outperforming for the last many weeks now, so no big surprise there. But I guess the momentum can just continue in the days to come. From a sector point of view, looks like there is a bit of rotation going on. So metal has done well today. And for a change, all the defense names are buzzing in trade. I guess defense is more of a pre-budget rally as well. So entire defense and railway stocks have done well today. So maybe a bit of pre-budget rally could be on the cards in that particular space. But I've not heard any big buying or selling, so to speak, on those sectors. Again, as I said, the bigger theme seems to be the broader market outperformance from here on. That could be the big trigger to watch out for the next 10 days. And again, one part could be that there could be lack of selling as well in the broader markets from the larger institutions. So that explains a bit of outperformance today in the broader markets.
Okay, all right, indeed. I mean, it's good whichever way you look at it. Sectors, broad market, large cap, mid cap, small cap. Indeed, it's a nice looking screen. Nimesh, what about individual stocks? Any specific chatter?
So a couple of stocks on my list. The first name is UPL, United Phosphorus. That's been buzzing in trade today. In fact, in the last couple of months, the stock has actually re-rated to some extent. And there has been a lot of anticipation that maybe the Advanta IPO filing could be around the corner. So it looks like that seems to be one of the triggers for the stock to do well. There is a bit of buying as well. And also, apart from the IPO filing for Advanta, the city is anticipating another corporate development as well. So watch out for UPL in the days and weeks to come for these two triggers. The second stock is Tega Industries. We all know about the large deal. The one round of fundraising has already happened. Now I understand there could be another small fundraising via preferential issue very soon in Tega Industries. So maybe that explains a bit of outperformance in that stock as well. And the last name is LG Electronics. Post the listing, the stock has actually underperformed and has corrected as well. Looks like that selling is largely over. That's the overall feedback, that the FI selling seems to be largely over in LG Electronics at this price.
Okay, all right. So we'll keep these names on the radar. Thanks very much for joining in. We'll take a break on that note. On the other side, as always, we'll get you some final trading calls for the rest of this day.
Welcome back. You're tuned in to Closing Bell. You're on CNBC-TV18. Well, keep an eye out on the markets, and from the broader markets, plenty of stocks actually are making a move of their own. Pull up DCX Systems. That stock has been a rank underperformer. But in the last couple of days, I think the stock is up 35%. It corrected from around the 300 mark to, I think, 160 odd. And just take a look at the move that we've seen out there. Pull up a few more names. Cross should come up. that as well saw a fairly big correction from the top. Year to date, it's still down close to 6%. But that one as well has made a bit of an up move in the last few minutes. Mitesh Thakkar is back with us from Bonanza Portfolio. Mitesh, give us some nice spicy ideas. What's on your radar?
I have two BTST calls, Nigel. I think very clearly the market is closing with strength. So carrying long stock positions and index positions might be useful. I think the first stock on the list is 361 at the day's high now. BTST here with a stop at about 1154 for targets of 1180 or thereabouts. And the other one is Adani E-Solutions, BTST with a stop at 999 for targets of 1020.
Got it. All right. And Mitesh, in the morning, you did have a trade on the Nifty, right? What do you think? Just wait by?
See, on the Nifty, as I said, I think, during the day, I suggested taking long with the stop below 26,056.50 or what about, and, suggesting to buy partly here and partly in 40-50 point kind of decline. So even hold long positions on Nifty. I do expect that this time we might be able to make a new high because it's a rising supply line. Therefore, 26,380, 400 looks to be the likely target.
Got it. Okay. All right. Thanks a lot, Mitesh, for giving us that quick take. Well, as Shriram Finance seals a massive 39,000 crore deal with Japan's MUFG, Srinvan caught up with Mr. Rivankar, the Executive Vice Chairman at Shriram Finance, to understand the rationale behind the deal and how it could affect the financial matrix for the company. Let's listen in to what he had to say.
We'll have a broader selection of broader sources to go, and that will bring down the cost further down. So apart from the strong balance sheet and rating upgrade, that should give us nearly, I believe, around 100 basis point decrease over the next 1.5 to 2 years, not immediately.
Okay.
It may take a longer time, but that will bring down my balance sheet cost of fund today is around 8.8.
Correct.
And that, if it comes down to around 100 basis point in the next 2-3 years, that much I can pass it on to my customers. There will be a higher AUM growth. We expect from 15% guidelines what we had given, we should be able to grow around 20% is what I feel, because we have enough branch network, depth in the management, we have a reach, we have everything to grow. We don't have to really build that to grow. Since I have that kind of a network and people, and also the constituency, my constituency is very comfortable with me, that the customers, I'll be able to really grow. So 20% growth is a comfortable growth for next 5 years. Definitely the ROE will definitely come down because of the large capital infuse. But ROA will go up. So as the ROA goes up, then ROE will definitely go up. As we are able to leverage more, the ROE multiple will go up. That's how it looks like. But you have to see other moving parts, like net interest margins are going to go up because of cost of fund is coming down. Our credit cost is going to come down because we are going to onboard a customer with higher credit profile, better credit profile. That is going to bring down my credit cost to some extent. So this, and with these two in between, margin and the ROA, definitely the ROA will move towards from 2.8 now to around 3.6 level, and multiple of that as I leverage nearly 4 times, and that's the kind of the ROE I'm going to get. So ultimately we'll move towards 15.5 or 16 in next 5 to 6 years.
Okay, all right. Well, let's go across to Vinny. She's tracking a lot of stocks that are moving around. Vinny, I believe you were just eating some Christmas sweets. So managed to finish that and just come back and tell us what the stocks in news, huh?
Absolutely.
Marzipan, what did you like? Or the rum balls?
Yes, that was my favorite so far.
Which one, the rum balls or the marzipan?
Rum balls.
Nice.
But yes, talking about the stocks also now, Nigel. So firstly, we'll talk about KC International. This one is in focus. Why today? Because Delhi High Court has stayed an order that was given by Power Grid to ban KC International from participating in the tenders. This on 18th of November, Power Grid had said that they're going to bar KC Internationals from participating in tenders or getting any orders from them for a period of 9 months. Now, this stay has come in, so it turns out to be positive for KC International. As for order intake, as of, in the year so far, it was around 4-5% of order intake is from Power Grid this time for KC International. And in Q2 FY26, the order book that was of around 39,000 crores. Out of that, we're seeing PGCIL, that is Power Grid, has around 15% share. So an important one that comes in for KC International there. Other than that, GE Vernova, they have won a very big order that's coming from Adani Energy Solutions. Now, this order is mainly for designing and establishment of 2,500 crore megawatt of HVDCs. And this is for South Olpad, which was a very important order that everyone was waiting for. This is a very big order win that everyone was keeping an eye out on. Now, analysts are anticipating the total transmission cost, project cost for this to be at around 16,000 to 18,000 crores. So an important order. On the back of this, we're also seeing other capital goods stocks that are not doing well. Siemens Energy, Hitachi Energy, because they were expecting to get this order. Now, instead of that, GE Vernova has gotten the order. That's why the stock is up in trade. And lastly, Varun Beverages, that is the one we'll keep an eye out on as well, because the board has approved an acquisition of 1,118 crores. This is of a South African company called Twiza. This is in the business mainly of non-alcoholic beverages. They're manufacturing as well as distributing their own brand here. And because of this, analysts believe that Varun Beverages' volume market share may and could be set to increase to around 20% in that geography. So an important update there as well.
Twiza, their expansion in South Africa. Non-alcoholic beverages, got that.
I think Vinny's going back to have a rumble.
Vinny's for sure.
Okay, thank you for that, Vinny. Well, as we move into the last leg of the show, let's get you some opinion. One thing on all investors' mind is how will the new year play out? Because 2025 was not very easy when it came to making money from Indian stocks. Well, we caught up with Rajiv Batra, head of Asia and co-head Global Emerging Market Equity Strategy at JP Morgan, as well as with Chetan Iyer, the key economist at Morgan Stanley. Listen into what both of them had to say on the Indian economy, the macros and the market.
Going into next year looks pretty exciting to us. The market is getting more worried about trade deals or the global AI environment. What keeps us excited is that policy is working at forefront, be it on the monetary term, fiscal term, and most exciting is on the regulatory easing front. We are also seeing discussions on FDI, be it in insurance and nuclear sector. So all this is coming as a music to the ears of long-term investors, who exactly want India to work on policies, reforms, and regulatory easing. And that's what India policymakers are rightly addressing at this juncture.
Private capex is going to be coming in with a lag. You should see this turnaround in consumption and exports, improving top line for the corporate sector for 9-12 months. And then we will see a follow-up in private capex. But these two factors of consumption growth and exports turnaround, we think will bring better nominal revenue growth for the corporate sector as well as nominal GDP growth. So for nominal GDP growth, we're expecting it to accelerate back to close to 10.5% by December 2026 quarter.
Welcome back. Last 5 minutes of trade today. Mayuresh Joshi joins us to help us out with that one stock that he likes very much. Mayuresh, go ahead. Please tell us that one idea that you want to give us. It's towards the end of the year. Santa's coming, but Mayuresh is joining on the show. So he'll give us a stock. Mayuresh, go ahead.
Afternoon, Nigel. I think we've got Jindal Stainless onto our watch list and radar. I think what is really transpiring is the kind of capacity additions that JSL is doing from 3 MNT to 4.5 MNT with the capex in excess of 5,000 odd crores. And what they've probably delivered so far in the first half, revenues have actually crossed 21 odd thousand. They will easily cross last year's revenue of 39,500 odd crores. The reported EBITDA per ton from 19,600 last year is somewhere close to 22 odd thousand. Debt equity stands at 0.2 times. And when it comes to probably the applications that are expected to happen specifically for a leader like JSL, not just in the traditional businesses, but upcoming businesses, including the likes of ethanol, nuclear power, as an example, there is huge opportunity from a market perspective, where the market itself in the Indian context is expected to expand from 4.8 to 7, growing at a pace of 8 to 10%. Return ratios look strong. The rating banking institution holding what we see in Cancelim seems to be strong as well. So this is one stock that we've got on our radar for the new year.
Jindal Stainless. Okay, got that. Mayuresh, hi. Good afternoon. I was just looking at these shipbuilder stocks. I'm not sure what it is. If it's just low volume, just some interesting, fun stuff. But anything you heard? Big moves on all three of them.
Afternoon, Survi, nothing at my end. But again, I think the entire construct in terms of the orders coming their way, which can be substantial and bulky, both, can probably add to the already existing order books that they've probably got, and therefore give them huge revenue visibility. The kind of government incentives that is probably expected to come through, specifically for the repair part of the business, which is a higher margin business, I think that can have implied effects in terms of tailwinds for the sector as a whole. And third, I think in terms of their execution capabilities and capacities, I think as they improve going forward, both cash flows and working capital requirements might remain extremely strong and robust. So yeah, I think the momentum might continue based on these tailwinds and factors.
And are you buying Shriram Finance?
Fresh
at these levels?
Not at these levels, but we are holding them in our global portfolios. As we've already discussed on your shows, I think this is one stock that we love from the NBFC space.
I do realize all the three guests who came on the show today, all have been three wise men. They all have had Shriram Finance from the start. Dipan, Dinshaw from Helios, and now Mayuresh. So it's a perfect hat.
And it was spent a lot of time in that 500 to around 650 odd mark, and valuations were cheap. And then you have the Japanese that came in there and said that, this is what I want. Maybe Rima's trips to Japan, had some kind of influence. but yeah, and it's good to see when a deal is announced and the stock gains 5% after that, 5-6% after the deal getting announced. So encouraging sign, and good not just for the company, but for India's financial system.
Oh, absolutely, absolutely. And I mean, it's been a resounding success. Emirates NBD with RBL Bank, Shriram Finance, lots of big deals and capital pouring in Indian BFSI. This is long-term capital, by the way, not the overnight, fly-by-night, quick hot money variety. So that's been the good one. Okay, we'll let you go a little early, holiday cheer. So go and enjoy the rest of your day, Mayuresh. We'll talk to you soon again. But for the time being, let's quickly start recapping what has been a really good Monday for the market. So we're ending not quite at the highest level, but it's still a 200-point rally and very firmly and comfortably above the 26,100 mark. So that should give comfort. And the other factor that will give comfort is the fact that broader markets have participated. The advanced decline ratio has been healthy, and the mid-cap index itself is up about 0.7%. Let me quickly recap the large cap winners. Shriram Finance, the stock that we were just discussing, up 3.5%. Trent has had a good session after a long time, 3.5% up there. IT has been very strong. Wipro, Infosys, Tech Mahindra, HCL Tech, all of frontline IT, TCS, all the frontline names, all up between 1 and 3 to 4%. Bharti Airtel was the other one, ICICI Bank. These are some of the other big gainers that stood out. Tata Motors also, by the way, Maruti, Tata Motors, also Bajaj Auto. Some of the auto stocks have had a good session today. SBI was the one that was kind of not feeling the Christmas cheer, down about 0.5%. But the bigger story is in the broader market. So let me quickly recap the list of gainers. I mean, look at the defense. Then look at solar industries now as we're closing out. 6% up.